Good afternoon, everybody. This is Chris Robinson, Robinson Ag Marketing, with today's post-close grain and livestock comments for Friday, the 26th day of December, 2025. As we're closing out the year, what were the daily changes? Okay, March corn only down a penny, but we had a pretty good trading range. We did hit the highest price we've had in 6 weeks at 453. We settled at 450, down a penny on the day. For the week, however, up 6.25 cents on the week. I think that's something to be happy about here. We did have the highest price for spot corn since November 14th. So I'm going to call that a 6-week high. In new crop corn, interesting, up 3/4 cent on the day at 468.5. But again, we had a 3-week high out there, and also up 6.5 cents for the week, almost a 1-month high in new crop corn. This is the way we want corn going, right? We need it to happen. I don't care about the why or the where or the who. We just need higher prices. And a lot of people waste a lot of time trying to prove how smart they are. We just want to trade price, guys. That's what I try and do. I've seen people to lose too much money too many times because they needed to be right. I want to be in a position for us to reward these rallies and defend them because Lord knows what's going to come down the pike on January 12th in the USDA. Moving on to the beans. March beans. We're saying goodbye to Jan beans. Jan beans did finish down 4.5 cents at 10.58 3/4. The Jan options expired today. It looked like the 10.60 calls were going to be winners early, and we did hit a high of 69.25. We had some sell pressure there, though, as people rolled Jan to March. March finished down 4 cents, but also had a high of 82. So almost a 13-cent range in beans, which is not unusual, but a good, healthy range there. Overall, for the week, the beans finished, I want to say, up 13 cents. Yeah, up 13 cents on the week. So don't miss the forest from the tree. New crop soybeans, SX26, finished up 14.5 cents on the week, right? At 10.82 1/4. That's a really good recovery. We had traded as low at 10.66. So to finish at 10.82, I'll take that. It's not where we were back on the tippy top there at 11.30, but a recovery is a recovery. We've recovered about roughly 25% of what we lost. Again, I don't know what's coming down the pike on January 12th. I want to be in a situation, no matter what happens, that we can reward it. But if you're long beans, 1080 is a lot better than 1057 the last time I checked. For the Chicago wheat, on the day, we finished down 2 3/4 cent at 519. But for the week, up 9 1/4 cent. This is why it's important to not miss the forest for the trees. Okay, keep a longer term. Try and keep a longer term outlook. Minneapolis wheat, KC wheat, all similarly higher on the week. For the day, Kansas City finished almost unchanged, down 1/2 cent at 533.5. Moving on to what is, I think, pretty interesting action. Interesting, kind of in a cautionary way. I'm talking about crude oil. Crude oil had looked like it was going to have a recovery. We went up and hit pretty big resistance. There was a trend line resistance up there around $59, 58.88, and we finished today down $1.61 for the day. But for the week, I think we were down something like a dime, right? So I think that's something to look at there as well. The 5-year low, which we had previously 54.98, this week we traded as high as 58.88. That did not last. Again, I don't know why these trend lines matter. They certainly matter to somebody. So we are back below $57 a barrel. We'll see next week if they push us lower than 54.98, which was, again, a 5-year low. In diesel fuel, which kind of good news, bad news, right? We did have a small bounce this week, but we settled lower and also made a new 6-month low at 210. Why is that important? Well, about 2 months ago, we were at 270, right? So again, this is a gift. Nobody buys the low, but if I'm an end user, this week has been a real gift if I use a lot of diesel. Moving on to the protein complex, fat cattle finished up $1.10 on the day, 229.65. For the week, however, down 1.2 bucks. So interesting. Kind of an outside week down in the fat cattle. Feeder cattle finished up a penny for the week, up a dollar a penny, excuse me. Um, we did have a 8-week high in fat cattle. We had a 9-week high in feeder cattle. We also had a 9-week high in the hogs. So this week was about recovery, recovery, recovery. The only problem with cattle is it's not getting up and finishing that gap. There's a gap up there. I've been talking about it. If you don't know where it is, call me, send me an email. I'll send you my letter, or just pull yourself up a chart. You can see what I'm talking about. For some reason, Mr. Market does not want us to go fill that gap above, which goes back to October, November area. Again, if you want the precise level, um, go to robinsonagmarketing.com, send me your email, I'll send you a chart. You can see what I do every day. I do the homework every day, so you don't have to stop and think. I mean, there's so much to keep track of. Unless you have it right in front of you, it's easy to forget about specific levels. That's a big part of what I do for clients. I do all the homework so you don't have to. Lean hogs finished the day down 30 cents, 89.47. But again, for the week, up 35 cents. So I think also you got to remember that we did have a 9-week high, a really, really good recovery in the hogs. So that's my takeaway. Some opportunities there. Again, diesel traded down to 210. That's a new 6-month low. Crude oil for the week did finish up 8 cents. Excuse me. I thought it was going to be unchanged. Basically, it's unchanged. And why does that matter? Well, it looked like they were going to try and bounce it and try and maybe take it up higher, above 58, 59 bucks. That area is resistance again. Why does that matter? Well, that has a lot to do with what goes on with all commodities. Um, Money managers, they get excited about crude oil. They get excited about what's going on. Now they've got a really good story in the metals. New highs today, new all-time highs today in silver. I didn't want to hang up without talking about silver. Silver almost got an $80 print, 79.70. Just crazy. We opened up this morning at 72.70, pretty much on our lows of the day, traded as high as 79.70. I can tell you this, we didn't have very many pullbacks. I had some guys all day. First, we tried to buy it around 74 in a pullback. Then we had an order sitting there all day to buy it at 75. No pullbacks today. So powerful move higher. All-time highs in silver. I'm sure that's going to be on uh, major media now because these guys look for stories. My only concern with that is the moment you've got some, buddy that's never traded silver, or they haven't traded silver since 2008. Remember what happened in 2008, 2012, right? Back during the Obama administration, we had an all-time high in silver, $50 or just under $50. People got all jazzed and excited about that, and it did not last. So all good things eventually will come to an end. If you don't believe me, just look at the correction that we had in cattle. Cattle rallied for months and months and months and months and months, and then in 5 weeks, we gave back pretty much 60 or 70% of the rally. My guess is sooner or later, the Grim Reaper is going to come for silver. It's probably going to come for gold too. It's probably going to be about the same time that you're the people on the nightly news who are the biggest fades on the planet. But when they start talking about gold and silver every day, they're not yet doing it. But boy, when they do, it's going to be a hint that we may be, getting ready for a correction. So since nobody can call the top, if I'm long right now, I'm making sure that I've got myself protected with some sort of sell stop, some sort of put option, because you don't want to be in a situation where you're the person that pays $79 for silver, and then I don't know how long from now. Doesn't matter if it's 6 months from now or 2 years from now, whatever. If we've had a huge correction, you don't want to be sitting there going, "Well, I was long at silver, but I didn't do anything to protect the profits." So that's my 2 cents on that. You have to treat this as like any other opportunity, but certainly pretty amazing move there in silver. March silver hitting 79.70. If you look at the gold as well, gold traded as high as 45.56. Again, it's going to be a matter of time before you start seeing uh, commercials on TV. Gold 5,000 this, gold 10,000 that. I've been doing this for a long, long time. I can remember back in the 70s when we really had bad inflation, 72, 73. People were predicting kind of where we are right now. The only problem, yeah, it took 40 or 50 years. It took 50 years. So if you got 50 years to wait, sooner or later, everybody's going to be right, right? All right, so that's my take on that. A pretty good week for the grains. Wasn't a great close for Friday, but all in all, we've had a pretty good move, pretty good opportunity. If you're a farmer or producer, get after it, get something hedged. What's the next big risk? The January 12th USDA report. If you're looking for help, give me a call 312-638-8868. This is Chris Robinson. I do not have a crystal ball. What I have is 30 plus years of experience. If you're happy with your marketing, then heck, stick with what you're doing. If you're looking for a new approach, if you're having trouble staying on top of all this information, you want somebody that's going to give you an honest, straight answer and not just isn't going to tell you what you want to hear to make you feel good. So many brokers out there, they'll just, whatever. They figure out what you want to hear, then they tell you. I try and look at it very, very objectively. I work with both end users and producers. Um, and I try and do the best job I can for everybody. So, on that note, have a great weekend. Take care.